I would like to introduce Nomsa. Meet Nomsa. Nomsa is working full-time. Her employer deducts some money which is written on her payslip that pay-as-you-earn, UIF, and SDL has been deducted from her salary. She assumes because this process is being done, she is covered with regards to taxes. By the end of the financial year, when she goes and files a tax return, individual tax return ITR 12, Nomsa finds out that she is owing SARS 20,000 in addition to what she was paying. Some people are finding themselves in this particular situation, whereby you have been paying tax, normal tax like everyone else, but you still find yourself to be owing SARS quite a huge amount of money. In our discussion today, we are going to talk about what is the reason why you end up owing SARS, what is going on in that particular situation, and what is the solution to be able to deal with a situation like that so that you avoid it from recurring again in the future. First of all, allow me to explain what pay-as-you-earn is. I will explain pay-as-you-earn as an estimate of the tax that you are supposed to pay at the end of the year. So individual tax usually is determined on the ITR 12, depending on how much income you would have earned during the tax year. So by the end of the tax year, SARS will look at how much income you have received from various sources. They put it all in one bag. Then they will calculate your individual tax based on the total amount that you would have received from all the various sources during the tax year. So when pay-as-you-earn is being deducted during the year, it's just an estimate towards the end of the year when you are doing the real taxes and finalizing on your tax for the tax year. Who are the people who normally find themselves in the situation that I've just mentioned? There are a few individuals that I can already mention, but the list is endless. I'm not going to mention everyone, but I will talk about the most common scenarios that we have found over the years. So people who are having a side hustle are more likely to find themselves in this situation. People with 2 jobs, people who are earning commission income, people who have got investments, people who have got rental incomes, directors of companies that may receive a monthly income which is deducted when pay-as-you-earn has been deducted, but at some point they receive some other income from their business, might also find themselves in this particular situation. The solution is you need to review your tax affairs to have a look at all the sources of income that you are receiving, especially if you are receiving significant amounts of money from a certain source of income. Make sure that you make an assessment during the year or at the beginning of the year so that you can be able to do your tax planning to avoid yourself from owing SARS at the end of the tax year when you are doing your tax. Because if you know in advance, you can be able to make a provision towards that tax, or you can tell your employer about other sources of income that you are receiving, and they can be able to deduct the right estimate on your pay-as-you-earn monthly as they deduct it. To avoid a lot of confusions, a lot of people are benefiting from our monthly packages where we assist our clients on a monthly basis, advising them on if there are some estimates that needs to be adjusted so that they avoid themselves from being in this situation. If that sounds appealing to you, please consider joining the accounting and tax community, our monthly program, become a monthly client, and we can be able to assist you. Otherwise, if you don't want to become a monthly client, we can also offer an assessment to you to tell you exactly if you are deducting the right amount of tax to avoid a lot of pain and confusion that comes from knowing that you are owing SARS additional tax. Thanks very much for watching, and see you again in the next video. Until next time, goodbye for now.